what's going on? It's James here and wanted to shoot an update video for you. It is, I don't know what day it is. My sleep schedule's been all messed up. It is Saturday, November the 7th. So I know yesterday I said I was going to do less frequent updates than I am, but after I shot that video, I was looking through some charts and I noticed a few things. So I thought, well, I'll do another quick update and share what I found. Because it kind of goes along with what I was saying yesterday anyway. So before I jump into the content, please do me a huge favor. If you're watching this on YouTube, make sure you give it a thumbs up. Also, don't forget to subscribe to the channel so that you can get more lessons like this. And if you have not already, obviously make sure you check the description. There's a link down there where you can join the Patreon. That's where I'm going to be posting a lot more of my updates as I scale back from YouTube. Just $7 a month. Seriously, it takes less than one trade with even the smallest of budgets to make that money back. Okay, so there's two things I want to talk about. The first thing is going to be this Gartley pattern, and the second thing is going to be about scalping. So this Gartley pattern, I'm not a Gartley trader. I had seen them in the past, but I didn't really pay that much attention to them. But what happened was, if you guys remember, if you've been watching the channel a while, I first talked about the potential for a bat pattern a few weeks ago after somebody asked me about it on Twitter. I went and started researching it a bit. I didn't know much about it before that. And the funny thing is this is kind of how trading works, right? Every pattern that I use today, at some point I didn't know about it, right? I didn't, and if I had known about it, then, you know, life would have been so much easier, right? I could have went back, for example, in 2017, if I just understood Fibonacci levels, wow. You know, I could have probably tripled or even quadrupled my returns. And in 2018, had I known about Fibonacci levels early in the year, because I didn't learn about them until, you know, middle of 2018. But if I learned them in the early part of the year, then I would have realized that I should be selling on those dead cat bounces that kept coming up to the 61.8 instead of holding all the way down. So everything that I know today at one point was new to me, and this Gartley pattern was new to me a few months ago. It's still new to me now, but as I go back and start back testing it, it's like, wow, this is really, really amazing, right? So first I want to show you one that's already played out. There's not much you can do about it at this point. This is the total market cap, and this one's a little bit different. It didn't work when I drew it from tail to wick, which is sometimes the case. Here's the deal. I saw the pattern, I was researching the pattern, and I thought, you know, I almost know that's going to fit that total market cap chart, right? That's one thing about me, is I'm really good with patterns. I think it's why I was able to play poker for a living, is because I could identify patterns really quickly. So when you're playing against people and you can, you know, identify the patterns they're playing with and things, it helps. But so I went and put this on here, and I drew it from close to close, and we get a Gartley that looks like this: X to A to B to C to D. And it's pretty close to the textbook, and it's within the guidelines that you're allowed, basically. And what it did was it gave two targets. The first target was the 1.272. Second target was the 1.618. Well, look what we did, right? We came down to this D. This was actually, you know, this would have been a long entry if this was a tradable asset. Stop loss down at the bottom of the tail. First profit target right here. So your trade setup would have looked like this, right? Stop would have been about 27%. That's, you know, a position trade that's kind of how it works. And then there's your 2 to 1, right? Boom. And in this case, since your first profit target was actually way up here, that was actually a 5.5 to 1, you know, risk reward ratio. And again, I don't know why it's called risk reward, because it's really reward risk. It's 5 reward, 1 risk. But anyway, that's what that trade would have looked like, right? You could have taken profits there, and it came back down. Maybe you held half of it, and then your second target was way up here, 205%, which seemed ridiculous back here, but look how perfect it touched this profit target. Bounced back, hit the top of the support there, and then went right up and threw a wick right through that second profit target. Really neat stuff, right? And again, this is called a Gartley pattern, and they're harmonic patterns. They're based on Fibonacci levels. So I'm not going to pretend to be an expert on these. Like I said, I just started researching these, you know, a few months ago, and then I did a lot more research yesterday. So I would encourage you to go to Google, right, and just Google this stuff and just read the different websites out there. There's all types of free websites when it comes to technical analysis patterns. Read up on them, right? You can go to sites like Baby Pips. You can go to sites like Investopedia. You can go to sites like Stock Charts, right? There's some really good stuff out there, and it's free. So go check that out. All right. So now that I've shown you the bullish bat, I think it's the bullish bat. That they have different animal names. So forgive me if that's not a bullish bat, but I'm pretty sure that is what that's called. What I'm getting ready to show you is a bearish bat. And this is the one that I first identified, and then I started looking for other patterns after that. So let's go over to Bitcoin. All right, so I did that video yesterday, and in that video I talked about the fact that this, it could be a bull market. We put in some really beautiful structure, and that if we correct back down to our 61.8 Fibonacci level, which would be, let me put it on there real quick. 61.8, where are you hiding at? So if we correct it back down to this level around 8,400, I would be looking for bullish structure and potentially looking for longs. But I also said that I'm not ruling out that possibility that this is indeed distribution. We talked about the wick off spring, and this could be, the spring distribution that's going to send us much lower. This is another thing that kind of points that way. So depending on what site you research, right? They all have kind of differing opinions. The most conservative opinion that I found was that if you have a bat pattern, that you can set a profit target at the 61.8 of the A to D move. So meaning you would take your fib here and draw it all the way to here, and that you would put a conservative profit target here. Well, guess what? That's right at $8,000, which lines up beautifully with those Fibonacci levels that I talked about yesterday. So that's the bullish scenario. If this ends up being a bull market, we could see this pull back. It actually said between the 61.8 and the 0.8 is a good profit targets for a short. So we could have a pullback to this level through here, right? So if you short up here, you write it down. I'm not saying you, but that's the theory, is you short up here and then you write it down to this area and take profit. So that's the bullish scenario, down there to that 5,700 to 8K, which by the way would make sense because our 200 moving average, our weekly moving average is down in that ballpark. Okay. The bearish scenario, and I kind of even put this out there with a little bit of grain of salt. The bearish scenario is the same thing as the bullish one, the 1.272 and the 1.618. Well, the problem is you're already seeing it. The 1.272 makes this a negative number. So at first I was like, but if you put it on a log chart, watch what happens. Suddenly our 1.27.2, our first profit target in the bearish scenario, would be $2,008, and our second profit target would be $1,142, right? $1,142. What is that number? We already know what that number is, don't we? We know that that number happens to line up nearly perfect with 2013 high, which is $1,158. Okay. And again, if you want to see how to draw this pattern, and I'm saying take it with a grain of salt because I don't like the mismatch. I don't like, okay, well, you're using a regular chart to draw the pattern, but then you're turning a log chart on to get targets. That's a little bit wonky to me, and that's why I say that it makes a, kind of like that more conservative target of that, 6 to 8K range. But again, we're gonna know within reason. We can't know anything, but if it gets to 6,000 or 7,000 or 8,000 and it starts moving sideways and putting in some nice accumulation, we're going to have signs that are going to be pointing bullish, hopefully. The danger becomes if it goes down to 6,000 to 8,000, it starts moving sideways. We think it's accumulation, so we're buying or longing, and it ends up being redistribution, in which case it just completely falls out of the bed. But that's what stop losses are for. You're not going to be right 100% of the time, right? And you can't be afraid to take that trade. You've got to take your trades, you've got to use proper risk management and accept that sometimes you're going to be wrong. But anyway, if you want to see how to draw this, it's just this little pattern on the left-hand side, the XABCD pattern. And if you're drawing a bearish one, meaning it's got to fit. You can't just say, oh, I want to draw bearish or I want to draw bullish. But if you're going down, it's a bearish currently, right? So X to A to B to C to D. And the way this works is this first move from A to B, it's supposed to be to the golden pocket. So you draw your fibs like this, and boom, there's your 61.8 right up into the golden pocket. The second move, and you can go look up the rules, all of this, okay? But the second move has to be, within a certain range. A to B is the golden pocket. B to C is like, it's supposed to be around the 88.6 or the 38.2. So this one was 92.6, so very, very close. And then the C to D is supposed to come up to the 78.6 or the 1.618 extension, which in our case would be way up at like 27K or something. And if it went that high, then it would be the wrong angle for this, if that makes sense. So this is a very, very clean Gartley pattern. And like I said, then what you do to get your target, you simply measure from the A to the D, and it gives you your extensions. So put on a log chart again. There is the $2,024. There is the 1,000. In this case, this is a BLX chart. In this case, it's $1,154. The 2013 high was $1,158. So yeah, that's, I know that everybody is super duper bullish, but remember that if this is distribution and if this is macro complacency, which is what my concern is that this was one bull market, right? That these were actually pullbacks, that these were actually more like 1, 2, 3, 4, 5 Elliott waves, that this was the A, this is the B, and that we're going to have a C, which is going to be really nasty, right? That's my concern, is that that's what's actually happening. And everybody is so focused on, well, this is what happened before, that they're just assuming that we're going to go to new all-time highs. Well, if you look at a bubble chart, complacency is literally that. We just need to cool off for the next rally. So yesterday I was leaning more bullish, and I was really trying, guys. I was really trying to get bullish, because I thought, gosh, But then I was looking at blank charts. I took all the lines off. I used a blank chart with none of my previous TA on it because I didn't want to be biased by it. And I was just looking at it objectively. I even called my wife into my office, right, which is my spare bedroom, right? I called her in here and I said, hey, you don't trade, you don't know TA, do me a favor, look at this pattern. And I showed her the pattern on Google, and then I showed her the pattern on the chart. I said, does that look the same to you? And she said, yeah. And then I showed her wick-off distribution, and I showed her a chart and said, does that look the same to you? And she said, yeah. She said, what does it mean? She didn't know what it meant. She had no bias, right? She wasn't trying to say I was right or wrong. She didn't know what I wanted her to say, right? This is a completely objective observer who doesn't have a skin in the game because she doesn't pay attention to my trading at all, right? All she cares about is, are you making enough money to pay the bills, right? So she had no bias. She had no reason not to be objective, and she saw the exact same thing that I'm seeing. So guys, I just lean bearish. I mean, and listen, I'm going to be totally honest with you. I don't like it, because I don't like the idea of going back down to $1,000. And here's why I don't like it. Because I think the only way Bitcoin goes down to $1,000 is if the stock market crashes. And I think it's got to be a bad crash, right? And I'm not so sure. This isn't like previous times where it crashed and you would get excited. Oh, I get to buy cheap Bitcoin and ride it back up. I'm not entirely sure if Bitcoin goes down that it will ever go back up. So this is not a case of, well, this guy just wants it to go down to buy a bunch of Bitcoin. No, because if it goes down to $1,000 in the midst of a financial crisis in the world, then a lot of people are going to lose faith. The whole reason people, started getting into Bitcoin, other than speculators trying to make money, but the thing with Bitcoin was, this is our safe haven. This is where we can put our money, we can put our wealth here, and we can keep it safe away from all these world governments. If something goes down in the world, we still got our Bitcoin to rely on, right? So if it crashes to $1,000 while the stock market is crashing, who's going to go buy Bitcoin when it's all said and done? It's failed, right? So I would buy Bitcoin just because the risk reward, the payoff would be so huge if it did go back up, that it would be okay to me to put in 10, 15 grand at $1,000 of Bitcoin, right? And risk losing it. That I would absolutely accept that risk. But I am not rooting for $1,000. I'm really not. So that's kind of, that's where I'm at with all this. Is I think this probably is macro distribution. I really do. If it drops to $6,000 to $8,000, I will look for longs, right? I'm not going to just completely ignore the setup because I'm really mad at myself for doing that back in March, right? I took the trade in March and then I closed it more out of fear than anything else. I should have rode the trend, right? There's no ifs, ands, or buts. It doesn't matter if it goes to $1,000. It doesn't mean I get to go back and pat myself on the back and say, look how right I was. No, I missed an entire freaking move. That's not right. That's stupid, right? It was stupid. I shouldn't have closed the trade down here. I should have just rode it all the way up, okay? Which brings me to my next point. It didn't occur to me until yesterday, and I'm really glad somebody, said this, but I had posted in some trades on Facebook, and I take a lot of trades, like a lot. I can't remember the exact number off the top of my head. I'd have to go look at my trade journal, but I think I took 19 trades in the last 2 days. It was either 19 or 20. I won all but one, and the one I didn't win, I broke even on. So this idea that you can't win most of your trades is complete bullshit. You can win most of your trades. You can win a lot more than 50% of your trades, right? You just have to have a really good system in place. And I'm not saying that that's how it is always, because no, I normally don't win that high of a percentage, right? But you can win most of your trades, okay? But yesterday I was posting on Facebook about that, and somebody made a comment that it's not worth doing all those scalps, that he had been long from 10-2 and he was just writing it, right? Why not just write it? I don't know why it never occurred to me that I haven't made this clear in the past that I need to. You can write a long and still scalp, right? And I'm not being sarcastic. Let me show you what I'm talking about. Let's go to a Bitcoin chart. So this is a Bybit chart, okay? I'm not going to talk about all these proprietary setups I have, but let's just, let's talk about the setup from yesterday. Oh, I'm going to have to use a Coinbase chart to do this, or something with more history. Okay. So if you watched yesterday's video, we talked about those shorts, right? Those horizontal resistance levels and those shorts you could have taken, which, by the way, that first one was a lot easier than the second one because it was a monthly level. It wasn't just weekly. See that? That was the monthly all-time high. So let's not even talk about 2019. Let's just talk about 2020 for now. Okay, so let's say that you were long Bitcoin from $4,000, right? So here this is coming up, and you're going, well, I don't want to take any scalps because I'm in a long position. Okay. I'm not saying you have to close your long position. You can, let's just say for easy math that this person is writing a 1 Bitcoin long, right? And let's say that it's sitting on Coinbase, that they have it on Coinbase. It's spot. It's not a futures contract. It's actual spot Bitcoin. Okay. Well, you can go over to a site like Bybit and you can keep your 1 Bitcoin over there in Coinbase and you can still short Bitcoin right there and you can write it down and then you can close your short, and it's a hedge. So say you took a 1 Bitcoin short, you would be hedged. When this fell back, you would make money. You'd still have your 1 Bitcoin. You'd close it down here and then it would continue going up. And guess what? You still have your 1 Bitcoin. Nothing changed. You didn't incur, well, I shouldn't talk about taxes, but I'm assuming that where you're at in the world, you'd have to check with a tax advisor, but I'm assuming you wouldn't incur capital gains since you didn't touch this, right? And then, like I said, you still have this, nothing has changed, but you've also made profit here, right? You don't have to sell your spot. Or even if you were, let's say that you weren't in spot, let's say that you took out a 1 Bitcoin long on Bybit or on any of the sites out there. Let's just, wherever, just Joe Blow's site. Okay, so you're in a 1 Bitcoin long. Okay, you can still stay in that long, but open a short here, write it down, make money, close the short, never touch this, and keep writing that. I didn't realize that some people were misunderstanding and thinking that you had to be one way or the other. You can have multiple trades open, right? I have multiple trade accounts. I have 3 accounts with Bybit, right? For different reasons. One of them is an account that I do swing trades on. One of them is an account that I do scalping on. And one of them is an account that I use to hedge my spot Bitcoin. So like when I say, hey, I've sold my spot Bitcoin, what I'm actually doing is hedging it, which is the same thing, except I don't have to touch the spot Bitcoin because then I incur capital gains, right? And don't get me wrong, I still incur capital gains on the hedge itself, but my Bitcoin gets to sit over there in a long-term capital gain status because I'm not touching it, right? Because over on Bybit, I'm trading USDT and I'm trading the futures, right? The perp contracts. So yeah, you can absolutely be, a Bitcoin bull if you want to be, and you can still short Bitcoin. Or, right, you could be sitting in your Bitcoin over there and you could have longed down here, for example, right? By the way, I want to point out, because I don't want people to get the wrong idea. I said I've taken like 19 or 20 trades in 2 days. That's not normal. I don't want to be like, oh yeah, I do that every day. It's just a normal day. I traded for 16 hours yesterday. I started trading about 2 o'clock in the morning. I didn't stop trading until the daily close. I traded 16 hours. I don't work 16 hours a day most days, number one. And number two, there's usually not that much volatility. See, right now we're at this extreme greed phase. If you go look at the fear and greed chart, we're at like 90. I think we were 90 yesterday, and we dropped to 88 after the close. We're in extreme greed. So what happens is you get a lot of volatility, and that makes for a lot of trade setups, okay? Normally it's not like that. Normally I'm looking for 1 or 2 trades a day, okay, in crypto, and then I'll do a little bit of trading over in stock. So like yesterday, I can't remember if I took 9 or 10 trades. I should have looked before I started the video, but yesterday I took, I know exactly what I took. I took 6 Bitcoin trades yesterday. I took 5 shorts and 1 long on Bitcoin, and then I took 4 Boeing trades, and 3 of those Boeing trades I made money on. 1 of those Boeing trades I broke even on. And all 6 of the Bitcoin trades made money. So that's what I did. I did 10 trades yesterday. But see, I'm trading them like with Boeing and the stock market. I'm trading 1-minute charts. So that's the reason that I can get so many trades. 1-minute charts, guys, right? In and out, in and out, in and out. And with Bitcoin, I'm trading mainly 5-minute charts right now because the volatility is so high. When the volatility dies down, then I'll have to go back to like 15-minute and 1-hour charts. Those are kind of my bread and butter. But when it's super high like this, the 5-minute charts work really great. I mean, there's all kinds of setups coming in. There's all kinds of divergences coming in. It's like yesterday in the video, I talked about being, in a positional short. And I said, I try to ride this down and blah, blah, blah. But then I posted on Twitter and Facebook and Patreon. I tried to post it everywhere that I could that I was out of my short because I didn't want people getting the wrong impression. But why did I get out of my short? Let's put this on replay mode. This was really, really easy to see, okay? What is that? 15 chart might be even easier. But what is it? Are you seeing what it is? So I was in short. I had shorted from 15,737. Ended up closing that, reopening, closing, reopening, closing. That's why I kept shorting. I kept closing and reopening the same short for profit. Every time it bounced, I would reopen it. And I was just planning on writing it down. But then when it came down here, and this chart looks different today than it did last night to me, because last night there was a big ass tail. So what changed? Hang on. Let me figure out what's going on with this chart. Am I too zoomed in maybe? Yeah, I'm too zoomed in. Okay. I was going to say, wow. So this was putting in this this falling wedge. And I posted this on Patreon. Like I said, I posted on social media. I posted everywhere I could. But once it was putting this falling wedge, man, that's not it. I got to find the picture now. It's driving me nuts. Okay, here's the picture. And this was, again, see, it looks different than, what is going on? Anyway, this was the picture. I closed all of my shorts because this looked like a falling wedge to me. And falling wedges are actually bullish in nature. So I was thinking that it was going to pump, and it did. I posted this, and literally within minutes, this thing pumped like $300 or $400, right? I'm trying to figure out, my chart looks different because I had it on replay mode, you dummy. Okay, so this is where it came down, where, I posted that I was getting out of all my shorts. And like I said, look what happened, right? Bounced right off that, boom, $588 bounce, okay? So I don't remember why I'm sharing that now. I completely forgot. But anyway, if you were long over here on Bitcoin and you were excited thinking this was going to new all-time highs, it's cool. You could have still shorted this, right? And rode that down and made $500 or $600. And if you're really a Bitcoin bull, this is something you can do. I don't know that I would suggest it, but it's what I did in 2017. Let's say that you have 1 Bitcoin and you rode that 1 Bitcoin up to here. And let's say that you shorted right here, which, by the way, there was a really good reason to short there, but I'm not going to go into it. I took a short. I wasn't awake when this came in. So what I did, I shorted when it retested it. That's how I got in at 15,737, right? It came up for the retest. I missed it. I had just sat down. I think this was like 2 o'clock in the morning, and it had just started to fall. It was about right there, and I shorted it, right? So say you shorted right there like I did, and let's say that you have 1 Bitcoin. And let's just say you took a 1 Bitcoin short, so you were hedged. Well, when that fell from 737 all the way down to there, that's 2.77%. Let's say you didn't close it and you wrote it back up. Say you closed it for 2%. Okay, $320. Watch this. So if you took a 1 Bitcoin short, you made $320. So when you close it, you can take your $320 profit if that's what you want to do, or if you're a bull, you could just buy back an extra $320 worth of Bitcoin. So you know what happens in that case? Watch. If you made 2% on 1 Bitcoin trade, your 1 Bitcoin becomes, and if you put it all back into Bitcoin, your 1 Bitcoin becomes, easy math, 1 times 1.023, because 2.3%. Actually, it's 2.03%. Your 1 Bitcoin becomes 1 times 1.0203, which is, of course, 1.0203. So now you have an extra 0.02 Bitcoin, right? That would have been your profit if you just reinvested it. And if you do that over and over and over, what you're doing, if you're winning, is you're compounding your Bitcoin. Well, if you believe that Bitcoin is going to go to $50,000 and you get an extra 0.02 Bitcoin, guess what? That's an extra $1,000 in your pocket someday, if it happens, right? Let's say that you believe Bitcoin is going to go to, some crazy number. Let's say you're one of these believers that think that one day 1 Bitcoin will be $1 million. Well, guess what? That's 20 grand, 0.02 Bitcoin. Boom, $20,300. So yeah, you can sit on your Bitcoin and just do nothing if you want to, but if you're really a bull, why wouldn't you be trying to add to it? And people will say, well, you could lose it. Well, yeah, I mean, you could lose it. I'm not saying that. I'm saying it's okay to sit back and say, I don't want to trade it because I don't want to risk it. That's one thing, right? It's another thing to say, I don't want to trade it because it doesn't make sense. Well, that's bullshit. It makes complete sense to trade it. If you're winning and you're a bull, you could just be adding to your Bitcoin. If you're not a bull, if you're like me and you're a bear, then you're taking your profits in US dollars, right? But all of the crypto that I have at this point, it's all crypto that was bought with profits. None of it's crypto that I bought with money like out of my bank account, right? I had put a bunch of money in and out of the bank in the past, and then once I made my money back that I had lost in 2018, I took it all out, and I just kept profits in the game, and I've been playing with just profits ever since. Right? So anyway, the video is 33 minutes long, and I meant for it to be about 10 minutes. This is why I don't want to do videos all the time, because I can't shut up, right? I just ramble on and on because I love this stuff. But anyway, I hope you guys enjoyed this. Like I said, I wanted to, talk about the Gartley patterns. I wanted to talk about this idea that, you have to do one or the other. You don't. You can scalp, and you can still stay in your long-term positions if you decide to. And I wanted to talk about that, that macro distribution idea, not because I'm trying to scare anybody. I just want people to go into it with eyes open. If you want to take longs, like you said, that's what stop losses are for, right? You don't have to take a long with no stop loss. That's crazy risk, right? Or if you're investing and you're like, I don't care. Like I have a buddy who does some investing and stuff, and he said, if I didn't invest it, I'd spend it on something stupid. So in his case, he doesn't care if he rides something to zero, because in his mind, the money's going to be blown either way, right? So he might as well take a chance with it. So I get all that type of stuff, right? I totally get it. And, I'm not a hater of Bitcoin, guys. Like I had my daughter, I told her to start getting involved in silver and Bitcoin last year, right? And the difference for her is if the stuff crashes, I can just reimburse her, right, if she loses money. So, I just don't want to come off and be like, oh, Bitcoin's terrible and you shouldn't invest in Bitcoin. Bitcoin's the worst thing, ever. I don't think it's the worst thing ever. I just think that people need to be aware that there's no guarantee that this time is going to be like every time before. This could be the first time that we have a really bad, horrible 90% crash. Well, it's not the first time, but we could have a really bad crash because this could be the first time that Bitcoin's, in existence during a global bear market in the stock market. Bitcoin has never had to deal with that. So the first time that, it did have to deal with the stock market having a really bad crash, that back in March, we all know that Bitcoin underperformed horribly. So with all that being said, I'm some guy sitting in a spare bedroom at 5 o'clock in the morning. So I could absolutely be wrong. Nothing in the video is financial advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up. Leave me a comment. And like I said, if you have not already, make sure you check the links below. You can join Bybit with my affiliate link. They got some really great deposit bonuses going on right now. Those expire, I think, at the end of November. And of course, you can join the Patreon for just $7 a month and get access to more frequent updates and some really cool stuff. Plus, you're supporting me, which is nice. It's always nice to see people appreciate my work. So this is James with Crypto Common Sense reminding you to please trade safe. And if you're watching this on Saturday, have a wonderful weekend.